Good morning. This is Bloomberg Daybreak Europe. I'm Jemana Bersachi with your top stories. Asian stocks bounce back from their worst sell-off in more than 2 months. A rebound in gold and silver helping calm markets after Monday's volatility. Musk's mega merger. SpaceX and xAI are set to combine in a $1.25 trillion deal as the world's richest man fuels his increasingly costly ambitions in AI and space exploration. Plus, a nifty deal. Indian stocks surge after President Trump slashes U.S. tariffs to 18% following agreement by Prime Minister Modi to stop buying Russian oil. Well, you heard it in the headlines. What we are seeing is some market stabilization today, better handover from Asian equities, and S&P futures pointed to open up in the green, up 0.3%, a better session for Wall Street yesterday. Stabilization prevailing in precious metals. Take a look at gold this morning. We are up 3.5%. Silver also seeing some stabilization after the heavy sell-off that we got on Friday and Monday. So some calm being restored in precious metals. And then Brent, take a look at the price action there. We're trading just below $66, down 0.6%, building on yesterday's declines as investors look towards those potential discussions between the U.S. and Iran over a potential nuclear deal. Let's switch over and take a look at some of the main risk events to watch out for today. On your calendar, 7:45 a.m. UK time. Watch out for France CPI. This is the preliminary figures, so you want to keep an eye out on that, especially with ECB coming up on Thursday and the general decline that we've seen in these inflation numbers. So French CPI, one to watch out for later this morning. And then we'll also be getting some Fed speak. So Fed's Barkin will be speaking later today, and he clues hints on the signs of the U.S. economy, especially after the Fed opted to not cut interest rates at the last meeting. That will be closely watched. And then don't forget, it is earnings season still in the U.S. Later today, we get results coming through from AMD, a contender for NVIDIA in the chip space. So let's see what they have to say about AI. And so those are your risk events to watch out for later today. Well, there is a lot going on in Asian markets today. The handover pretty positive. We've also had an RBA decision. Winnie Su is in Hong Kong. Winnie, walk us through how these markets have been performing.
Yeah, morning, Jemana. It has been a pretty wild ride in the past few sessions, but today, a pretty happy day in Asia. Today, we've got MXAP here, in fact, up 2.8%, the best day since April, and we've pretty much reversed all losses from yesterday. And leading gains today here are the technology shares. You've just got Samsung Electronics actually extending gains to about 10% earlier, and that's really driving the Kospi here 6% higher. And overall, lots of optimism after that big sell-off. However, bucking the trend, you've got HS Tech, in fact, down about 1% and dipping through that bear territory. And that's coming after some concerns around authorities potentially raising tax on some of the internet companies. Now, flip the board and take a look at cross-asset. You just mentioned that RBA rate hike, and that is lifting the currencies and also bond yields in Australia. Now, pairing a bit of gains there because we've got a bit of cautious tone coming out from the presser just now. However, when it comes to the Japanese markets, we're seeing that the 10-year yield, in fact, ticking slightly higher. A bit of weakness when it comes to demand from that bond auction earlier today, signaling that investors are still quite nervous ahead of that election this weekend. Now, flip the board and take a quick look at Indian assets. You just mentioned President Trump cutting those tariff rates to 18% from essentially 50% for India goods. So that is lifting overall stocks in India, especially exporters, and also currency here strengthening about 1%. Back to you, Jemana.
Winnie, thank you so much for the really comprehensive overview. There is a lot going on in Asia, as I mentioned at the top. Winnie Su in Hong Kong. Well, let's go back to markets now. Gold has jumped, clawing back some losses after the abrupt unwinding of its record-breaking rally that had driven prices down 13% in just 2 days. That's bringing Venram, Bloomberg MLive cross-asset strategist. So some calm is prevailing in markets today. Is the sell-off, the frenzied sell-off that we saw on Friday, Monday over for now?
It does look that way. It reminds me of what happened in October, Jumana, when we saw a very quick flash crash, kind of 10% correction, and then it's taken about since then to go to a new record. So I think that the markets are still in this mode where there's a lot of momentum going into these trades, and there's lots of liquidity. There's plenty of liquidity chasing the markets that is willing to buy on every dip. That means that within 3 to 4 months, I wouldn't be surprised if gold goes back to the previous record of around 5,600. But after that, what happens is that the risk reward gets skewed. So I don't think investors should be chasing gold and silver at these levels.
Yeah, well, I guess now we can go back to thinking about what Kevin Warsh might mean for the Fed and the typical trades that people have been doing, stronger USD and the curve steepener. What derails those trades, the Warsh trades, so to speak?
Well, I think that, the question is, what happens if he wants to cut much more than the markets are pricing? The markets are pricing 2 rate cuts, as you know. And I think that, Warsh's op-ed in the Wall Street Journal saying that, there's more room to cut rates is what the markets are not prepared for. I think that the markets are thinking, look, he's got 1 vote in the FOMC, so how much is he going to be able to influence the trajectory of the FOMC? But I think, to answer your question more specifically, I think what will happen to money markets if he starts shrinking the balance sheet, I think that will cause some ructions in the money market, which I don't think is priced in. So I think that's what I would watch out for.
Yeah, so a liquidity play to think about. Ven, thank you so much. Ven Ram, Bloomberg MLive cross-asset strategist. Well, big news in corporate space. Elon Musk is combining SpaceX with his artificial intelligence startup xAI in a deal that values the combination at $1.25 trillion. The acquisition was announced in a statement on SpaceX's website, confirming our earlier scoop. For more, let's bring in Bloomberg senior strategist Neil Campling. Interesting, very interesting to see these two entities tied up. And of course, SpaceX is more of the crown jewel than xAI is. What's Musk trying to achieve with this deal?
Well, certainly he's kind of mentioned that the grand plan in some ways is to have these orbital data centers. You're taking the whole data center and AI literally into space. So that's kind of the grand vision with this particular combination. We're still expecting SpaceX to have an IPO later this year, and some reports have suggested perhaps for $1.5 trillion. There is another part to this, I think, as well, which is that actually, when we look at numbers that people have been talking about, xAI has been loss-making. Some reports suggesting that it lost nearly $8 billion last year. So xAI effectively had run out of cash, so it kind of needed the combination and cash injection through Musk's empire. And I think that's an important reason as to why this has taken place now, rather than waiting to do the transaction closer to the IPO for SpaceX itself.
Really important point to mention there. Okay, let's switch tack and talk a little bit about Palantir. It's still earnings season. Really strong performance in extended trading. It seems like they have actually forecast revenue for the year that is significantly above Wall Street expectations. I mean, this is just all adding fuel to the fire around AI right now.
It's interesting you say that, actually, fuel to the fire is a great phrase, because Palantir in many ways sort of ticks a number of boxes. Should we say it ticks the YOLO, MOMO, the box, momentum, the retail traders, the AI enthusiasts as well. So it ticks a number of boxes in many respects. Now, the 70% growth rate they posted for the 4Q numbers was staggering. Incredibly high growth, the highest on record that the company has posted since going public. It's also guiding to, as you mentioned, to very strong growth for 2026. But it kind of needs to, because it is trading on 56 times forward revenue estimates. But I thought it was the interesting phrase from the CEO actually that came out in the statement was that the performance of the stock or the results were a cosmic reward for the believers of AI and the stock. So the AI thematic is very much sort of still in focus, and the growth is still coming through, which will certainly be a relief today, given some of the performance we had last week from the likes of Microsoft, with the slower growth of Azure than people expected.
Yeah. Neil, stay with me. Yesterday, I was watching our programming, and you were talking a lot about this huge bond issuance that Oracle were planning on bringing to the market. We're now one day on from that, and I think it's safe to say that the bond offering was actually received with a huge amount of demand. Again, does that help allay some credit concerns that were perhaps brewing in the space?
I think it does. I think the structure of the combination of the bond and the equity was well received. It was well telegraphed. It wasn't a surprise to the market as such. And I think as well, by saying this is what they require for 2026, it's taken positively in the sense of they're not going to need to come back and tap the market again. And I think when you look at what happened with the CDS spreads last year, that was a big concern, is this just Oracle needing to continually tap the market? So I think there's some comfort in the fact that investors are now not expecting Oracle to need to come back to the market again. And the appetite, as you say, for the structure and being well received is definitely a positive step.
Yeah, $25 billion, and it received over $130 billion in orders. So it tells you a lot about the appetite that was there. Bloomberg senior strategist Neil Campling, thank you so much. Well, still to come, the world's largest EV maker, BYD, says it wants to boost international deliveries by 25% this year. We will be speaking to Stella Lee, the company's executive vice president, at 6:40 UK time. But first, after months of political upheaval, the French premier and his government have prevailed in passing a budget. More on that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. France's parliament has adopted a budget for 2026 after Prime Minister Sébastien Lecornu survived 2 non-confidence votes. For more, Bloomberg's Caroline Conan joins us from Paris. So what's better than 1 confidence vote, 2 confidence votes that he survived? Carol, why has it taken so long? And is it fair to say that Lecornu is out of the woods now?
And in fact, he survived as many as 6 confidence votes over the past couple of weeks. So the least we can say that it's been a very long and very exhausting process for this budget. We're already in February, more than 1 month after the deadline. And France finally has a budget after this whole political uncertainty for the past 4 months. Lecornu had this change of method. He wanted to let the parliament debate. He wanted to let the parliament decide. That strategy showed somehow some success in December when he managed to pass through the social security budget. However, for the overall state budget, the mountain was too high. There was too much political infighting in parliament. So in the end, he had to use this constitutional tool, Article 49.3, in order to force the budget through without a vote. That led to 6 votes of no confidence over the past couple of weeks. And last night, finally, Lecornu can breathe. He has a budget. Already last week in this same show, Daybreak Europe, we spoke with Roland Lescure, the French finance minister, who was already saying that France had a budget and was out of the woods for this year.
We have a budget this year, 26. That's a budget of stability. As you said, we're lowering the public deficit. We are doing 50-50 expenditure cuts and a bit of tax increases. We're going to have to work on the 27 budget, but give me maybe a week or 2 to enjoy the fact that we have passed a budget for 26, that we have respected our targets for 25, and that, yes, there's more work to be done, but so far so good, let's admit it.
The budget is far from perfect, but clearly it is a sign of stability after these 4 months of political uncertainty in France. Remember when Lecornu resigned early October before being reappointed again a week later, the spreads between the French and the German 10-year yield were at 85 basis points. Now we are down to below 60.
Yeah, so we've seen them snap back. And I guess this leads me to my next question, Carol. We've talked about the political challenges in getting the budget passed, but what does it actually mean in terms of numbers for this deficit that we've been talking about and that investors have been so fixated on in 2026?
We actually had good news yesterday with this news that France is reporting the narrowest gap in public finances in 2025 since COVID, less than 125 billion euros, better than expected. So that gives hopes that Le Cornu will manage to reach this 5% deficit target for this year, even though the Bank of France governor, Villeroy de Galhau, has been disappointed that this budget is not ambitious enough in terms of deficit reduction and especially in terms of spending cuts, because in this budget there was a lot of concessions to the Socialist Party, so a lot of new taxes. For example, there is this extension of this new super tax on multinational, also the tax on highest incomes being extended, a new tax on family holdings, so not so much efforts on cutting spending. And clearly that's going to have an impact on the debt levels over the long term. This year already, France's debt is expected to reach 118% of GDP, could reach as much as 130% by 2030, and growth is not expected to be as high this year, just over 1% according to Bloomberg Economy. So clearly, before the next presidential elections in 2027, already next year, we don't expect any major reforms for this government, given the lack of maneuver that Le Cornu has in Parliament. And next month, in March, we're going to have in France local elections that could be a bellwether for what's going to happen at the national level next year.
So, some good news then. Bloomberg's Caroline Conin, thank you for bringing us the latest in France. Well, India stocks jumping and the rupee rallying after the U.S. reduced tariffs on the country's goods. President Trump says the U.S. will reduce tariffs on India to 18% after Indian Prime Minister Narendra Modi agreed to stop buying Russian oil. Bloomberg's India economy and trade reporter Shruti Srivastava joins me now from New Delhi. So presumably all of this is good news for India.
Definitely, it is good news for India. Throughout the last year, the overhang of high U.S. tariff, it weighed on the prospects of Indian economy, and with signing the U.S. steel, which comes in quick succession with the European Union deal, which was signed last month, India gets a good advantage, especially over its regional rivals like Vietnam and Bangladesh, which are both at 20%. So India gets an inherent competitive advantage, at least in the manufacturing sector. This has also revived India's ambitions of, being the manufacturing hub, the China Plus alternative it wanted to be. Plus, it's a good news across all asset classes. The capital outflows which we were seeing, analysts expect that they would be contained now. The rupee volatility that we have been seeing, of course, it's a huge boost for the rupee as well. Exporters who were buffeted by high U.S. tariffs, especially in the labor-intensive sectors like apparel, footwear, it's a big plus for them. At least the mood, the sentiment on the ground is likely to, revive after the deal. As we await the details, this is indeed a good news for India.
Okay, so you say we await the details. President Trump has framed this as India agreeing to no longer buy Russian oil. In an interview with Bloomberg Television a week ago, the Indian oil minister said that their purchases of Russian oil had actually declined, but it's still something to the tune of about 1.3 million barrels a day, down from 1.8 million barrels a day. So what do we actually know about what was agreed to between the two sides?
As you said, Trump has posted that India has agreed to not buy Russian oil, and the petroleum minister, he mentioned that India continues. Now, since the Ukraine war, India became one of the largest buyer of Russian oil. But due to Trump's pressure and high U.S. tariffs, India has indeed cut down its purchase of Russian oil, but that has not become negative. It has not come to zero. And India has always maintained that it will decide, whether to buy Russian oil or not based on its own economics. The details are still coming on this bit, and there is still no clarity from the Indian side on what exactly has been agreed upon. But we for sure know that the position of the government has always been that it will decide where it wants to buy oil from and from which country.
Shruti Shrivastava from Bloomberg Economics in New Delhi, thank you for bringing us the latest and some of the details surrounding the U.S.-India deal. Well, coming up, U.S. and Iranian officials are expected to meet for talks in the coming days over a new nuclear deal. We'll bring you the details next. This is Bloomberg. Welcome back. Now to some of the other top stories we're following this morning. U.S. President Donald Trump says he expects talks with Iran over a new nuclear deal in the coming days. It comes amid a flurry of diplomatic activity aimed at averting war between the two countries. Iran's president saying overnight he has instructed the country's foreign minister to, quote, pursue fair and equitable negotiations with the United States. Oil falling again this morning on easing geopolitical risks after its biggest drop since June yesterday. President Trump is pushing House Republicans to accept a deal he struck with Democrats to end the partial government shutdown. In a post on Truth Social, Trump told lawmakers to swiftly pass the measure with no changes. The bill would fund most agencies through to September and the Department of Homeland Security until February the 13th, preserving funding for immigration raids while both parties negotiate changes to enforcement policies. President Trump says U.S. Attorney for D.C. Jeanine Pirro will take her probe of the Federal Reserve and Jerome Powell, quote, to the end. Such a move could complicate the confirmation process for Trump's nominee for Fed Chair Kevin Warsh. At least one GOP lawmaker has vowed to block all Fed appointments until the probe is resolved. And the UK's Metropolitan Police say they are to review reports of alleged misconduct in a public office after new Epstein files were released. Documents from the U.S. Department of Justice appear to show that former UK politician Peter Mandelson leaked sensitive government information to disgraced financier Jeffrey Epstein while serving as a minister. Mandelson has denied wrongdoing. Meanwhile, in the U.S., former President Bill Clinton and his wife, former Secretary of State Hillary Clinton, are to appear before a congressional committee investigating Epstein. And a quick look at markets. A pretty positive handover from Asia Pacific today. The setup is positive as we head into the U.S. session and European session. But coming up, we're going to be talking about where is next for UK interest rates. We'll dive into that conversation ahead of the Bank of England's decision on Thursday. And that is with Bank of America's chief economist, Sonali Punani. That is coming up next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Jumana Bersachi with your top stories today. Asian stocks bounced back from their worst sell-off in more than 2 months. A rebound in gold and silver helping calm markets after Monday's volatility. Musk's mega merger. SpaceX and xAI are set to combine in a $1.25 trillion deal as the world's richest man fuels his increasingly costly ambitions in AI and space exploration. Plus, a nifty deal. Indian stocks surge after President Trump slashes U.S. tariffs to 18% following agreement by Prime Minister Modi to stop buying Russian oil. And let's get you a check on markets. Things are quite robust this morning. The S&P futures are up 0.3%, a better end to Wall Street yesterday. A strong handover from Asian markets as well. We'll talk more about that shortly. But in general, what we are seeing is stabilization today. Take a look at Euro also gaining a bit of a ground versus the USD, which is slipping. So again, bucking the recent strength the last couple of days. We saw money pour into the greenback. Today, that's being reversed a little bit. 118.15 as we head into that ECB meeting on Thursday. And then, of course, gold stabilization this morning is the theme, up 4.5%. Silver also up almost 8% today. So we are seeing a rebound in precious metals, and that's providing some calm to the market. But let me bring you some breaking news that's just coming through. Nintendo earnings crossing. The headline here, the third quarter operating profit for Nintendo has come at 155.21 billion yen. That is below the estimates of 180.75 billion yen. To give you some more detail around it, we have the 9-month original Switch sales came in at 3.25 million units. That's down 66% year on year. Giving some guidance, they see the Switch 2 sales at 19 million units. And software sales at 48 million units. But the takeaway here is that the third quarter operating income is actually a miss versus expectations. Time now for your front page news. The Guardian is leading with the Metropolitan Police assessing reports of, quote, alleged misconduct in public office after former UK politician Peter Mandelson was accused of leaking market-sensitive information to Jeffrey Epstein at the height of the financial crisis. The Wall Street Journal reports that U.S. manufacturing is in retreat and Trump's tariffs are not helping. Levies on imports were supposed to bring back a golden age of U.S. manufacturing, and they haven't worked so far, says the paper. This coming just one day after U.S. manufacturing activity unexpectedly expanded in January at the fastest pace since 2022. And finally, the Financial Times is leading on Elon Musk merging SpaceX with xAI in an all-stock deal, valuing the new company at $1.25 trillion. And as ever, you can get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, terminal subscribers can go to DAYB Go. That is on the terminal with some of the top stories that we've covered today. All right, let's take a closer look at the markets with Christine Aquino, Bloomberg Markets Live Managing Editor. Really good day to be chatting to you, Christine. We are seeing some stabilization coming through from markets, and perhaps that does tell you that the shakeouts and the positioning unwind in precious metals did actually have a knock-on effect on broader markets. And today, because precious metals are stabilizing, everything else seems to be trading up as well.
Yeah, absolutely, Jumana. Really today, it feels like is a bit of a reset after such a turbulent January. We had a lot of risk events, a lot of major catalysts that upended markets. Of course, a lot of attention being paid to this rally in precious metals. It looked really unstoppable over December and January in particular. But I think toward the tail end of last month, there was some worry that suddenly precious metals, which are typically seen as haven assets, they are seen as safe havens that investors flock to during times of turbulence, are suddenly maybe acting a little bit more like risk assets, right? That is precisely because of the speculative trading that we've seen piling into the space. And so took a bit of a breather toward the end of January, and now we're seeing a bit of a reset. And, you know, that's really just kind of rippling across risk sentiment across the board, particularly in equity markets, as we're seeing now kind of some of those concerns around this particular sector calming down a little bit.
Yeah. Let's move on and talk about the U.S., the outlook from here. I know Fed's Bostic is speaking later today, but we did have some surprisingly strong manufacturing numbers come through yesterday. ISM manufacturing, the strongest level since 2022. Given the resilience of the backdrop for the U.S. economy, isn't it going to be more complicated for the Fed and the new Fed chair, potentially Kevin Warsh, to signal that an aggressive round of easing is forthcoming this year?
Yeah, that's absolutely right, Jumana. And that is what makes the Fed chair job very difficult. If Kevin Warsh does indeed get confirmed and takes the helm of the Fed, he really will have that challenge. As you mentioned, right, we are seeing pockets of strength in the U.S. economy, but then on the other hand, signs of softness in the labor economy. And so, again, also a divergence between the survey data, which is the ISM manufacturing figure that you mentioned, versus the hard data. And so all of these kind of things hanging in the balance when it comes to a read on the U.S. economy. And that's why I think we did get a sense from Fed Chair Jerome Powell at his January press conference that policymakers seem to be wanting a little bit more optionality moving forward, right? They're not locking themselves in to automatic rate cuts moving forward, but they're not also necessarily saying that they're going to be tighter in monetary policy. And, you know, that is the balancing act that the next Fed chair, if Kevin Warsh does indeed get confirmed, will have to partake in.
Christina Aquino, always good to be chatting to you, Bloomberg Markets Live managing editor on our show today. Well, from one central bank to another, in the UK, the Bank of England will deliver its rate decision on Thursday. The benchmark rate is expected to remain at 3.75% as signs of stabilization in a cooling job market and scant progress on underlying inflation leaves the Bank of England in no rush to cut interest rates. But our next guest says they don't agree with the market's quite hawkish read of recent data and expect a cut in March. Shanali Punhani, UK economist at the Bank of America, joins me right now. So maybe let's just talk about the here and now, the upcoming meeting on Thursday. Nobody's anticipating a rate cut coming out of this meeting. But I guess then the question becomes, what is the ultimate neutral rate for the UK economy right now? Where do you think that number is going to sit? Is we closer to 3% or around 3.5%?
Sure. Thank you very much for having me. As you said, this particular decision is going to be fairly non-controversial with them keeping rates unchanged. But again, the key question is going to be the guidance that they give on future cuts. And I still think that, the Bank of England still has more easing to go. I mean, if we see in the December minutes, they kept the easing bias intact, and we expect them to keep doing that, i.e. saying that, there are more rate cuts that are likely to come. Obviously, there are lots of questions about the speed. They might want to be a bit, more careful in reaching the kind of neutral rate because, we feel that they are, somewhat close to it. But our view is still that there are more rate cuts to go. Our sense of neutral is about 3.25%. So we think that there are risks that the Bank of England, and our base case is based on the Bank of England cutting 2 more times, once in March and the other one in June. But if I look at, where risks are tilted, I would think that risks are towards maybe potentially a higher terminal rate, i.e. 1 cut instead of 2 versus, say 3. So if I had to pick the sort of balance of risk, I would say it's more tilted in a more hawkish direction rather than, them taking rates closer to 3%.
Okay, interesting. And let's talk about the recent batch of data that's come through. The market's interpretation was that it's been coming in better than expectations, and also some of the uncertainty around the budget is behind us now, which should, in theory, provide perhaps a bit of a tailwind, at least for businesses. There's more clarity on the backdrop. Why are you skeptical about the path for the UK economy this year?
Yeah, sure. Look, I think, we've obviously got some good batch of data with the sentiment data. I'd just be a bit careful in over-interpreting something like the PMI data. We've seen in the past that the PMI data has not been a very good indicator of where GDP really ends up being. And, whenever we get changes in sentiment, like, for example, as you said, the budget was a big event. It was a big clearing event. And, that's when uncertainty has reduced. But when we do see that, it seems like sometimes the PMIs tend to over-exaggerate or under-exaggerate the kind of shifts in sentiment. So we really need to wait for the hard data to really see if this kind of recovery that we are seeing in sentiment, if that's sustained, if that's something that's a Q1 story, or is it something that can sustain for the rest of the year? Yeah. And I think the jury is not yet out on that, and we really need to see that. The other important thing in the PMIs was that the employment expectations still look fairly subdued. And so I think we are facing this dichotomy where we are seeing potentially a stronger GDP data, but the labor market still remains quite weak. And that's something that's obviously that's important for the Bank of England's decision making.
Shonali, thank you so much for coming on our show today. Shonali Punhani, Bank of America's UK economist, a preview into Thursday. Well, coming up, the world's largest EV maker, BYD, says it wants to boost international deliveries by 25% this year. We will be speaking to Stella Lee, the company's executive vice president, live from the World Government Summit in Dubai. That's next. This is Bloomberg. Chinese electric vehicle stocks, including BYD, are falling after the nation banned concealed door handles on EVs. It is a new safety rule expected to drive up redesign costs for some models. We're joined by Stella Lee, Executive Vice President of BYD, to talk about this and more. Stella, really good to be talking to you, very timely. I'm going to start with the news of the day because I walked in and I saw that news, the authorities in China banning the head and door handles. What impact is that going to have on BYD?
There's no impact. Actually, BYD is a global leader for technology. So we always design our car very safe. Even our car with the hiding handle, then it's anything happen will automatically punch out. So very reliable. But now with new regulation, we're already ready to change any handle the government wish. So, but as a technology company, BYD is always put the customer safety is number one. So every single details design for every details in our car is really focus on customer safety and the performance.
Yeah. Let me ask you about sales as well. And again, the latest figures have shown that BYD sales actually fell 30% from a year earlier for EV sales in China. What exactly is going on there? And can you give us visibility on when you expect those numbers to pick up?
Yeah, this is very normal because the whole EV market is dropped due to the government incentive program. It's walk away very rapidly. So this make the maybe January all the ICE car sales is continue strong, but the NEV sales is dropping. But the BYD is still in very strong position for this NEV business. But normally our expectation in next 2 months will quickly pick up too. And another figure you can see, BYD overseas sales is continue performing very strong.
Let me ask you about your international expansion plans, because, again, I mentioned that in your introduction, there are plans to increase deliveries outside of China by 25%. And the latest figures, the car registration numbers in Europe, showed that 1 in 10 of the cars sold were actually sold by Chinese EV makers. How much of an opportunity are you seeing there, specifically in Europe? And then we'll also talk about the Middle East and the UAE as well.
Yeah, so I think for BYD, we focus on what the customer needs. When we bring this very high performance, high quality car, and with wonderful technology in the car, then we are very competitive. The people in Europe, and they just love BYD car. And when we are landing in the UAE, I was here for the past 2 days, talking to all the local people, organizer, a lot of staff, they just come to say, "Hi Stella, I love your car because you're like a Denza B5, B8, I can play in desert very well." And it's cool. So I think there will be some challenge in there or there. But if you focus on the customer, they love the car. They really emotionally love BYD technology. This will make it in any place. Then it's very easy.
Yeah, let's talk about pricing as well, because the EU has also issued guidelines on minimum pricing as a means of averting tariffs. Do you welcome that? I mean, what type of discussions have you been having with the European Union about minimum pricing?
We don't have a clue what they're going to do, because in the end, it's a consumer market. It's a consumer choose what kind of car fit for them, and then I don't even know how they can structure the minimum price. But the BYD, we come to oversee. We go to every place. We are focused on deliver the value on the car, not to focus on the low price sales. We are focused on deliver the best technology, total solution to our customer, make consumers enjoy the technology, enjoy the performance, not to really position BYD to focus on price. So, but at the same time, BYD offer is a wide range of the car. So, for example, this year in UAE GCC region, we introduced light model. But by end of this year, we're going to introduce in BYD total 13 model. In the same thing happen in Europe, and then when you introduce a wide range model, you have the car to cover A, B sector on the SUV and also sedan, but you also have a car is premium luxury. So then the customer will choose the car based on their needs.
Yeah. Let me ask you about the UAE, since you're speaking to us from Dubai. What makes the United Arab Emirates a good place for BYD to bring in some of these models? Because we're not talking about huge scale here. We're not talking about a population as large as you would get in the EU. So what is the appeal for BYD?
It's my first trip to Dubai. And then it's really the amazing country. The UAE, we have the national cooperation with UAE for the battery storage. And then now, remember, BYD is not just a car company. We are the leading player for battery storage, and also we're leading player for all the technology here. So we cooperate with different divisions on different technology here. So we view this market here will be really the home line for us to bring all the R&D and the innovation here to pushing the next generation robotic and also autonomous driving technology here in the region.
So speaking about innovation, can you give us some more color on what customers can expect in terms of upgrades to software, to hardware, any timeline for that throughout the course of this year?
Yes. So we introduced some model here. Then you have a Google Glass and the Apple Play, all the high-tech technology integrate into our car. And then when we introduce the Denza brand here, then we have a hardware ready for autonomous driving. So now the next step, we're going to put an R&D engineer in the GCC area, and then to work on the autonomous driving is our next big step here. So it means even our car not only be able to autonomous parking and then in the highway autonomous driving, but then we can achieve the point-to-point autonomous driving capability.
Stella, thank you so much for your time today. We really appreciate chatting to you, Executive Vice President of BYD. Thank you. And later, I'll be speaking with the IBM Chairman and CEO Arvind Krishna about AI and enterprise following their very strong results last week. He'll be joining me from Dubai's World Government Summit. I'll be heading down there in just a short while. That conversation is starting at 8:45 a.m. UK, so in a couple of hours. And in the meantime, just to tell you that it's been a really strong day for markets. The MSCI's Asia Stock Index has now risen above 3%, set for the best day since April. So what goes down definitely goes back up again. Very strong performance and handover from a lot of these Asia-Pacific indices, including the Nikkei and the Kospi. Now to some corporate news. A U.S. judge has ruled that a wind farm being developed by Ørsted off New York's Long Island can resume work after being halted by the federal government. It is the fifth such court win for an industry President Trump has sought to cripple. The judge ruled that the project would be irreparably harmed, calling the administration's decision likely arbitrary and capricious. And Europe's largest asset manager, Monday, reported fourth quarter pre-tax profit that beat expectations, saying it benefited from investors seeking to diversify away from U.S. dollar assets. The firm also unveiled a 500 million euro share buyback that will begin tomorrow and be spread over a period of about a year. And plenty more coming up on the show. This is Bloomberg.
I didn't have any. I think maybe 1 or 2 cuts would put us at neutral for my outlook, and that would make it very unlikely if we did that for us to get our inflation back down to our target, or even get it on trajectory to that. So I think this is a time to be patient.
That was the Atlanta Fed President Raphael Bostic there. Interesting to hear his comments vis-a-vis not predicting any rate cuts for the rest of this year. So we'll see how this all plays out. About 2 rate cuts are priced in. But I will say that a lot of the conversation now is also around the size of the Fed's balance sheet, because Kevin Warsh has historically advocated for a smaller and less interventionist Fed. And you can see from here, over the last couple of years, there's been a small trimming of the Fed's balance sheet, but not without quite significant impact on some of these short-term repo markets, as we were speaking about with Van earlier in the show. The question is whether he is going to be intent in bringing down the size of the balance sheet even further. That could have a knock-on effect on some of these markets. So something to bear in mind. This is a subject of conversation for many in the space. Switching over, let's talk about the U.S. equity rally. I thought this was quite interesting because other sectors are beginning to participate, including industrials and small cap stocks. It's not just Magnificent Seven. It's not just AI. You are seeing the rally beginning to broaden a little bit. Remember, yesterday we did have that stronger ISM manufacturing data. Cyclically, that's good for the small caps. So something to bear in mind there. And then let's take a look as well at metals. It's all been about gold and silver, hasn't it? And this is quite interesting because it tells you that the 50-day moving average did actually hold. We bounced off for both of them, for both gold and silver. And today we are seeing a bit of a bounce in both of those areas. So again, the technicals have actually provided some good support. Let's see if it holds up. As for the rest of today, a couple of risk events to watch out for. 7:45 a.m. UK in about an hour's time. We got French CPI. These are preliminary figures for January. And obviously will be key and parsed ahead of that ECB meeting on Thursday. 1 p.m. we get the Fed's Barkin. He will be speaking later on today, more hints perhaps about the U.S. economy. And later, it's earnings season. Don't forget, AMD will be releasing their earnings. Let's see how they are doing in terms of competing with NVIDIA on some of their AI accelerator chips. But that is it for Daybreak Europe. The opening trade is coming up next. This is Bloomberg.